And with that said, we are now entering Friday, the 3rd of July. Summer season is hitting a little bit in. And welcome to this LinkedIn live show today. It is 11 o'clock in UK, it's 12 in Denmark. And hi, Kevin. Nice to see you again, my friend. And welcome to our two guests. This is from IEHub, Garrett and Mark. You will have the chance to introduce you properly in a second, but I have looked forward to this Friday because maybe the summer is hitting now, but we are launching some exciting things together. Product coming up, launch is coming up, new legalization is coming up. It's all coming in together. So welcome to this Friday. And maybe Garrett and Mark, you want to give a short intro?
Thanks for having us, Martin. Yeah, hi, Garrett Llewellyn from IEHub. I'm Chief Commercial Officer at IEHub, and look forward to the session. Mark.
Thank you. Cheers, gents. I'm Mark McIlvany. I'm Chief Experience Officer for IEHub. So excited to be here and talk to everyone about what we've got coming along.
So 30 minutes is kicking off now, and maybe Kevin, as always, you should set the scene a little bit of today's conversation.
Yeah, I'll try to go a bit upbeat on this. We've got a number of events coming up, and we've been posting quite madly this week around the advent of Buy Now, Pay Later, the 15th of July, what that means around proportional affordability checks, but also the really hot topic of data sharing. And one of the areas I think I want to kick in on fairly early on, because I know this is close to Gareth's heart. If we cast our mind back to November 2024, when borrowers in financial difficulty came in, we all had high expectations that we're going to see more work around proportional affordability assessments, the role of the standard financial statement, data sharing, where the consumer wants it shared with their other creditors and debt resolution firms, and how we engage with the debt advice sector, where somebody looked like they're in problem debt, over-indebted, had multiple debts would be the element of it. Here we are now in July 2026, and we've had a lot of regulatory activity, and we'll cover some of Gareth's anecdotal stories from Credit Week in a little later on. But Gareth, your thoughts coming off the back of that, November 24 to now, what have you seen?
Yeah, it's been a couple of years now, hasn't it, Kev? I think we'd hoped to see the behaviour of certain sectors, certain creditors change or look to change. And if we're being brutally honest, we haven't. We've got a core of customers who kind of really get the benefits of a customer being able to tell people something once and then that being shared. And the I&E process is, a pretty long process to go through, although we'll talk about some potential improvements on that later. But we're not seeing the big uptake in this sharing or allowing people to share their I&E information with others, which is a bit of a shame, really, because there are obviously ways and tools, and that's what we do. There's ways of doing this and making it easy for everyone, but perhaps hasn't moved forward as much as we'd hoped. And I guess, Kevin, will it until someone gets sort of pulled up by the FCA on it?
Well, what I think I would say, I'm hand this to Mark, really. You've seen some take up of some very big names, tier one banks, big energy firms. As with anything, a bit like the work we've done with the Vulnerability Registration Service, getting to critical mass so that people are using it and sharing. What's your thoughts there, Mark? So as I said, there's some big names you've signed up in recent times.
Yeah, I mean, definitely. I think there's and we talk about sort of sector shifts. We've not seen whole sectors kind of move into that share and plan. But we do have some kind of real spearheads in each sector. So if you're a customer and you're lucky enough to have those credit assets, I can definitely log in. I can share my I&E with an energy company, my water company, a range of financial service providers, debt advice. I can do that, but at the minute, because it's probably smaller portions of each sector, there's a little bit of a luck of the draw. And that's supposed to your point there, Kevin. We need that mass to really be able to help that one single customer get to all, if not most, of their creditors in a tell at once manner.
Yeah.
Martin, just bringing you into this fairly early on, some of the discussions you've had with large BPOs, debt resolution firms, creditors, etc., suggesting that there needs to be a change to proportional affordability assessments, but it needs to be done, stepwise. A lot of people now got a portal in place, but that often doesn't distinguish between those at a higher risk and those that you can probably accept the offer that's making to them. What's your view and what you're hearing, Martin?
But I think some of the motivation for the industry to begin to, without having fines or somebody coming and hitting them in the head, is also that there is more flexibility, that it fits into their operational day to day. That's of course why tell me once is a good thing, because when that's filled up, when you have enough profiles and not industry sharing those things, then you will have that journey smooth. I hear a lot about different kind of customer profiles where you want to have X amount of information. Maybe you decide as a DCA that this is enough to do an income and expense and affordability check on that type of customer segment. Does that need to take 30 minutes, 20 minutes on the phone? Probably in some cases, probably in a lot of cases not. Could that be smoother? Could that be more fast? Because in the end, it's not only about the DCAs, the financial institutions, it's also about serving the end client, especially if you're an outsource partner as a DCA, that you want to make that journey for the end client, the debtor, as smooth as possible. So what I hear a lot is the wish of flexibility, is the wish of being able to design a little bit more. What do I need to know to take the right decision and be able to document that also?
And I think that's a key tenet, the consumer duty. I mean, the FCA want to see that you have gone through some form of due diligence, that when you're setting up a time to play, it's going to be sustainable. It's in the consumer's best interest, without necessarily, having to go to in great depth with some client segments who have a propensity to pay. And on that point, sort of, Mark, things like confidence. We talked about this a little bit earlier on. There used to be a perception that if the client was filling it in themselves, that self-declaration was likely to be inaccurate. But you've applied a lot of data analytics to this. You looked at it where open banking is involved and other third-party data. What are your findings? And I'll ask that to Gareth as well, that it appears to me that some of this is building some really useful information around the confidence that you can have in an INE, and hopefully then the people that are using it.
Yeah, I suppose from our point of view, we've done a lot, and we get asked questions a lot on INE quality. How do you make sure that you get a real, true version of what the customer has to offer? So we've got things like open banking in the journey that can pull in different data sets. We've built lots of guardrails along to make sure actually we're weeding out things that just can't be true. We've done a lot of work to check our data, so checking that open banking data against customer self-declaration. The two sit side by side, and then we've done huge amounts of kind of real world checks through one of our data partners, and Foremost, where we've looked at well what's happening in consumer spending in the real world against data points like energy price caps, against cost at the petrol pump, and our data kind of follows that same curve. So that tells me that if a customer logs in, they want to commit, they're going to do their INE, they're engaged in the process, and they'll kind of tell you to the best of their knowledge what their spending looks like. We've then taken that a step forward and we've built a confidence score. So from an agent perspective, I can view that customer's INE against 15 key data points. On that INE, I can tell you, does it look right? Does it look too high? Does it look too low? Is it a missing data point, importantly? So from our customer profile, we know kind of the data points we'd expect to see, and the system will then flag, this looks inconsistent. Customers told us they have a mortgage, they haven't put in a mortgage payment. We'll flag that straight away. We can fill that gap. And then from a risk perspective, we can make a judgment call on where do we go next.
And Gareth, I think we talked about, buy now, pay later, 15th of July. Many are reverting to having to use open banking to do the affordability assessment, not just for new clients, but existing clients who've used it 100 times before. You've got a meaningful minority using open banking, but it's by no means, the biggest number on that. What's your thoughts, particularly given some of the Foremost view around this self-declaration versus using third-party data?
Yeah, about 25% of our customers decide to use open banking to speed up the sort of onboarding process. and that is creditor driven. If their account was originated through open banking, they're a bit more comfortable using that. But that's still quite high for this collections use case. We talk to people whose sort of experiences are a lot lower than that, but it still isn't the silver bullet. The categorization is not perfect. Tesco's, Amazon, what are they spending the money on? They could be buying a TV, they could be buying alcohol. You don't know, cash, what's going on. So it's never going to be 100% accurate. The just using open banking, but it does give you good visibility around things like income. So if there's a regular income coming in there's validation around that. So it's definitely got his pluses. But as Mark touched on, we've done some work with Foremost around this, and the self-declared versus open banking, the categories do correlate quite well. So we're confident that people are giving their best position over to get the help that they need.
Garrett, I'm very interested in also in understanding, how do you see the consumers, the end client, how do you see that culture of want to allow open banking data to be shared, to going in to create these profiles, to feel it's a process, I guess, also for an end consumer to understand and have a motivation to do that. A short reflection back to Denmark, where I'm from. I built a company a couple of years ago where we did know your customers for accountants and lawyers and everybody. When you go to the bank, your account, you need to do a KYC check. It's a quite long process also. It took some time in Denmark until now it became the other way, where you can share that, so they need to fill it out, and you needed to give access to more sensitive information. I think today, 2 years, 3 years after, it's normal in my country to share, to do, because I see the benefits of doing that. So one thing is, how do you see the consumer adapting to it? And also, do you think there is a job probably for the banks, for the lenders, for the DCA, to inform the positive things to the end client of doing this?
Yeah, education's a massive piece, Martin, definitely. And I think, if we went back 4 years, I think we'd be sitting there saying, yes, it'll catch on, and yes, the education will be in place and it'll see improvement. But Mark, it's been pretty steady for 3 or 4 years, hasn't it, in terms of that figure? It hasn't gone up massively, which I think I would have expected by now that it would have caught on more. As I say, it's definitely got a place, but for this specific use case, don't know whether we've kind of sort of leveled out really.
So if I lay the challenge down that we did in the Dempster Bulletin and we touched on with Chris last week, we're in the middle of the World Cup. England's chances of getting to the final are debatable after the match the other day. That being said, 15th of July comes in and you want to buy your pizza on the 19th of July, and suddenly find it's not feasible anymore because new, controls, new friction, for the want of a better word, has been implemented. Do you think in a consumer-led world, and buy now, pay later, for example, is consumer-driven, that this will be a massive wake-up call where consumers haven't been brought along on the journey, and that things like keeping an affordability assessment in the locker so you avoid embarrassment at the checkout is going to be one of the things that would take on, that consumers will really bite on something like that?
I think for a certain segment of the population, it could come as a shock, definitely, absolutely.
I mean, in my own space last night, I worked with John Fairhurst yesterday at PayPlan, and I just asked them the question: do they see a lot of buy now, pay later in debt at debt advice level and in debt management plans? And I think the post they put out last night suggests 66%, present with at least one buy now, pay later. And that's before the new rules with more referrals to debt advice. And as Fair for All Finance have said, they estimate 20 to 30% could get declined from that point forward. But that may be a driver then to people effectively budgeting using these tools if they've been a regular user of these type of products.
Yeah, I don't know the numbers, but I think that's where it's going to start to bite. It's those regular users, the people who are in a cycle, whether they're the pizza buyers or they're using it for other purchases, but it's those return, and that it's going to be a real friction point at the point of purchase for them. And having something ready available is that's where they're going to be able to keep kind of servicing those types of accounts as they do today.
And Martin, I think that keeps bringing you in on the product we're looking at the moment.
Yeah, because it was a good line over to that, because I think we all here have the consumer at the end client in the focus. What is the most easy journey to go to be settled enough to don't have that situation where you stand in the queue and then you had a problem? And so we try to create solutions also together now that make those journeys smoother, that make it faster, that make it more attractive, and that also make it maybe more commercialized, correct, and informed client. Because I think still, Kevin, every time with these shows, it's a regulation coming, and you need to do that because of regulation. And I sometimes say also, yeah, but maybe it's a good idea to do even though there was no regulation about it, because isn't this the right thing to do, to communicate this positively to your debtor, to the end client, to then begin to do it because it actually makes sense. Because why create a payment plan also for my clients if the client is not able to keep it? You need to do it all over again. So I think maybe this is a good little start to talk about. Maybe I can kick it a little bit off. We are doing a product together because I think when I thought with many of my clients are huge DCAs and huge lenders, etc. And I think the interesting thing here to do that journey smoother, but also to involve the client. So one thing is what we are doing now. Before we are doing, example, massive amount of outbound calls, we would already send an SMS out to the client, say, we're going to talk to you later. If you haven't heard, you can fill this profile in for an IE hub, and then you will have the information stored. And you know what? You don't need to tell it again. Don't tell me 20, just tell me once. That's a positive message. I think it's a service message, but that comes down to then we're going to offer the client to fill in those things either online or a combination of online and by my voice AI agents that can work smoothly together. Mark, maybe you can tell a little bit about our IE Lite version kind of a thing coming up also, and why that's relevant and how our products are complementing each other.
Yeah, so I think, I suppose if I set my position out a bit of an SFS purist and always been we want to see the detail, we want to understand what the customer does, but we've got to find a balance in terms of proportionality, and we've got to understand that we want customers to engage. INEs aren't sexy, they ain't ever going to be sexy. We've got to get that customer into a way of how do we get them to start that journey. So combining what we do, having an invite process to the customer and the option of a micro journey to do a short, light INE, something that gives them that engagement point with a customer, where through Mega we can search the IE Hub database. If there's a full detailed SFS, fantastic. We've got greater level of insight for that customer, and we can probably make more informed decisions. But for those other customers, we can have a light INE that can then drive that conversation through the Mega bot, and ultimately again risk-based, proportional final outcomes for that customer and for the creditor.
And also, just to highlight what you said, because I think one time is to do that conversation, to do those things, but again, after that, to have that service level. That is how I would sell it if I was the DCA to my clients, that we will deliver that full after on an SMS. So you went through something, and here you are. Here it is for sharing. Here's your profile. And again, I think you would have, if I was a consumer standing in debt, for me, that would be a debt collection agency that I would not normally like to talk with. Nobody likes to talk with them in general and be in that situation. But I would see that as, wow, that was an extra service. I think that have a positive impact on the whole payment journey that you are delivering that to your client.
I think the end-to-end customer journey will improve throughout. We heard from Gary Norris at UK Search, where they've upped the frequency of time to pay reviews. So what we're looking at within this in particular is not just the income and expenditure, it's the additional data. And we said we would mention income optimization, which I think is vital in today's world, which you get down the same pipe. But also things like the vulnerability registration service check. You got 1.2 million records there. But in amongst it all, because of the cost of credit searching now, for a few pence, you're actually identifying whether somebody's been bankrupt in a debt relief order or actively in an IVA at the moment. So you're building up a profile of risk, which is where Mark is coming from on a lot of this, and confidence that when you're dealing here, particularly where we're looking at some of the voice bot, do you keep it with the bot, or do you bring a human in the loop, something that's slightly more complex? But where I was getting to before I meandered off is that ability, as a result of even maybe a 15-question dialogue that satisfies you that the time to pay is affordable. 3 months' time, you've encouraged them to use the ticket, the whatever you want, a token that says you're auto-enrolled in IE Hub, to keep that up to date. So the contact you're going to get in 3 months' time, maybe only 2 minutes, which said, has anything changed in that interim period, particularly when you're looking at things like energy costs and other areas that Mark flagged, which are pretty volatile at the moment, for better or for worse. And I think that's pretty key. You know, so Gareth, you know, I think we've talked about this before. How do we keep everything up to date?
Yeah, I think
you can then get Mark's dream of a full SFS in due course, without it taking up 30 minutes of an agent or the client feeling like he's been having to do all the work themselves.
Absolutely. I think that's key. Different companies and different industries need a different amount of information to make that decision. But you know, we see that a customer going through that full journey and getting that understanding really adds benefit. So what we're doing is providing the information that's needed for that individual company up front, but then giving the opportunity for the customer to go through that full journey, look at things like income optimization, look at being helped by debt resolution and debt advice if they need that. But the account is theirs and they can keep that up to date. So when the company needs to have an update on that, boom, it's already there, and it's the full suite, not just the sort of short form information. And yes, that company can pick and choose which data it needs for their decisions, but it's all there. And then in another 3 months' time, boom, it's all there. So it makes the process so much easier. And then another company needs that information, boom, it's there. It's just easy for everyone.
Yeah, so what we've looked at is a process both for inbound and outbound, as we discussed, Martin, but in particular, if we looked at inbound, where somebody's ringing in and you don't know a lot about them until you pulled up the CRM record, it's how you make that journey for the consumer and for, you know, the company that is using the service. So CRM data, for the things we looked at, you should know the product that is actually in arrears. Might be multiple debts, but what's the balance? What type of product is it? Have they missed time to pay arrangements beforehand? Do you have other debts within the group? And then other additional data, are they a frequent mover? And then building this view around particularly whether the bot's capable of dealing with that quickly, or whether you need to hand off to a more specialist. An agent handing off to the bot to say, I can do income optimization. It's a relatively simple process, but keep our agents focused on what they need to do. And I think this thing, whether we're using something like dutiful data, where you can look at some of the high-level propensity risk and VRS and other tools there, but if there is data in the locker, IE Hub, to me, that's vitally important. Even if it is the light version, it's going to make that consumer dialogue much more tailored. And it feels to me like, coming that anecdotal story here, Gareth, this is the tea to it while we've got a few minutes. I believe you caught up with the FCA at Celtic Manor. You hijacked them when they were walking past. What was your reflections on that?
Hijack's a strong word. I was invited to say hello and talk, sort of. It was a good conversation, and I think the sort of expectations definitely growing in this area, and I think there was a little bit of raised eyebrows when I was kind of having a conversation around what we see and what we hear from certain companies and sectors that we deal with. Obviously didn't go into details, but some of the feedback that we've had, certainly isn't aligned with the way the FCA think about interpreting the guidelines that they've put forward.
I think you had 3 hours with her, didn't you?
No comment.
I got dragged off by the bouncers after 5 minutes.
Kevin, I just want to reflect back on what you said, Garrett, before. I think it was good. Again, you touched about all that I loved a lot was like, okay, the customer don't need to go back. They don't need to tell it again. They have it 3 months after, then they need to do a new review. They have it again. Let me just for 1 minute pitch a little bit again. You said, Kevin, yeah, imagine an inbound call is coming. Imagine then the AI agent, my agents will pick up, it will look up in iHub immediately, as you said, information will come back. Oh, already there we have a lot of information, hopefully. A little check to Dutiful Data, a little check through you guys to Vulnerable Registration Service coming in instantly to the AI agent to begin to make decision. As Kevin said, there will be data stored in the client's DCA's system about have their multiple accounts, have they moved, have they broke payment plan before, all of that going into the calculator. And in a split second, the AI agent, based on the DCA's requirements, have now done, should I transfer this to a human? Is this a hardship plan? Is this another payment plan that is allowed? And based on that, afterward, we are sending that information to the client for using it again. That, I think, was the product in a nutshell.
I think the one thing there, the caveat we should say is the really good news is we're doing the identity and verification on so many cases now. Yes. So we already know name, address, date of birth, and the like. We verified them, so it's a natural extension of that journey where you build some trust up and determine where the call goes to. So I think Gareth and Mark, in terms of this process of moving something in, I think Martin's obviously the sales guy here, but trying to do something here within a sort of 5-minute time zone where we've got data, intelligence, and the like. To try and find that right balance between what needs a human agent involved and what's not. Any thoughts on that as to, how we get a test and learn type environment there, which is the model that Martin likes, where we are able to embed something with the client's own policy rules and thoughts?
Mark?
I suppose for us, it's working with that initial launch client, because we can come up with different scenarios, things that we think might work, but it's those real policy situations kind of, and then the decision rules at the end. But just to drop one thing in, the bit that we haven't mentioned, which I think is interesting, is using the bot to plug those gaps. So where we've got 99% of an SFS, yet the bot can plug that one point. We know customers won't want to spend a long amount of time talking to a bot to fill in an I&E, probably be able to get them to do a short one, but plugging those gaps then enriches the data to say, well, we couldn't quite make the right risk-based decision here. Answer this question, we'll fill the gap in. But for me, it's getting that test case going to align to a real-world situation.
What I love about what we build is that there's the flexibility. So depending on the profile of the customer, the risk of the customer, we can do different things, but also it's the requirements of that company. There's no two companies out there that are the same. And what we've put together is something that can be tailored for each different individual and their customers, which is what you need. We need to sit down with people and talk it through and show them in detail. But I'm really excited.
I think keywords is all simplicity, is all based on looking at out of the customer's glasses, but also out of the person in the other end, the end customer, out of those glasses, and tailor solutions to that. As a couple of clients said to me yesterday at the big DCAs when I presented our mutual product, you think like an operation manager now. I like it a lot. And I think that stuck with me because that's how we try to set ourselves in the customer and the end customer situation. Kevin, on the last note.
Yeah, I mean, we're going to continue this theme. Obviously, we talked a little bit about the buy now, pay later, but I think it's going to become very apparent in the next couple of weeks to what extent consumers have been really brought along with the journey. And I think, probably the final words to Gareth and Mark, what do you see, in your view, the biggest triggers to try and build up that sort of community, which is vital in here to get the momentum you've now got with a couple of tier 1 banks and big energy companies, so we can get different sectors using this more effectively for the greater good?
Yeah, it's awareness, Kevin. It's simply awareness of getting people plugged in. So, if we had millions and millions of pounds in marketing budget, we can go direct to the consumer to tell them. We know that when someone comes to the platform, we help them and they get a lot of benefit. It's just that awareness going out. So it's getting to the creditors, and I think working with Mega gives us that ability to work with people who historically haven't really wanted to do a full SFS and go through that. So there's the opportunity to start that journey, get the customers on board, and then allow them to go through the journey and get the benefit that way.
I love it, and this was an amazing talk. We are on the end now on this Friday here, and I just wanted to say this is precisely as you said, Garrett and Mark. Thank you we have been talking for a year. We have been bouncing ideas. Now we are launching together. I am so proud of it. I'm proud of the collaborations, good spirit, good people with the same mindset. I will say we are having 1 week of break because I have to go to holiday for a week in a summer house where there is no internet, and I'm looking forward to it. Hope you also have some holiday. Next year would be 17th of July, 11 UK time, 12 Danish time. We will release something big because Mega is going on a world tour, and we will talk a little bit about that, probably also some other things. So with that said, I want to send you out to a good summer. Have an amazing Friday and a good weekend. Mark, Garrett, Kevin, thank you for joining this session today.
Thanks for having us.
Thank you. Appreciate it.
Speak soon.
Speak soon.